Ladies and gentlemen of the crypto space, we're live on a Friday, January 5th at 12:57 p.m. A little late today, a little busy this morning, but clearly lots to talk about. Big red in the markets. Everything's going down. How far is it going down? And did you zoom out a little bit from a monthly chart perspective? Or maybe even, hopefully, just a weekly chart perspective? It's not really that much down. It's not that red. But, what if you're wrong? What if you're wrong? What if the next modular hyperdrive sub millisecond finality roll up, roll chain, roll bit, hypercard, whatever the hell you want to call it, all this hyperbole that goes on? Now, clearly, they're adjectives and they're describing the functionality of these complicated systems that people are building, but it's a competitive market, which means it's an exploding market of endless competition. And when you have a market like this, it's the few that succeed, especially in the long run. And in the long run, you literally have like one, two, three, a handful, half dozen. Doesn't it? Doesn't seems crazy because if you look at meat space, everything coalesces into a few market leaders that run everything because that's the way humanity works. That's why there's two political parties. That's why sports teams are Team A versus Team B. Have you ever seen a football game or a basketball game with three teams? No, it's two teams. Everything in reality is binary. It's left, right, up, down, on, off, summer, winter. It's just the way things are. So all of this stuff with this gas token insanity. Now, sure, plenty of money to be made on Celestia. Plenty of money to be made on meme shit coins that have no fundamental utility. That's the biggest grossly misused word or phrase that I could think of. Utility. Utility, that you could stake it, that you could borrow against it and lock it and contribute to validation. Utility. I'm a reductionist. I reduce things to their most fundamental way to inspect them. That's the way I understand the world. And it also makes me miss out on a lot of opportunity with regard to appreciation. But clearly, I've succeeded. I've achieved what I've wanted to achieve, and I will continue to achieve what I want to achieve. And I right curve the shit out of everything. Now, utility. What is the utility? The reductionist perspective requires me to understand all there is credit, permissionless FX, foreign exchange swaps, which are AMMs, which is clearly a crowded space as well, and derivatives. There's decentralized file storage, Filecoin, and whatnot. The exciting shit comes with the high tech terms, roll-ups and parallelization and cheap transaction fees. For some reason, cheap transaction fees mean it's a good network because people that don't have money could use it to do what? To stake so they could experience capital gains. That's not the reductionist perspective of what is real utility. Decentralized file storage is very meaningful, and just the contracts themselves, from a computational standpoint, so you could disintermediate AWS and the cloud providers, and you could have state management that's basically free because you pay to mutate the state, but you could read from the state at any given time. So that's meaningful. There's some interesting protocols working on stuff like that, like just blockchain APIs, so you can manage your infrastructure for apps on a phone, Android and iOS. So instead of paying AWS for storage, you literally have your data in the cloud. But you're not going to do that on Ethereum mainnet. It's too expensive, and that is a meaningful narrative to consider for the future for cheaper transaction fee chains. Oh, it just so happens Solana is pretty hot, and then Solana was not. Then it was not hot as it comes off its top. But it's at $97. $220. Hell of a run. Trend looks like it's going to reverse for a little bit. From a daily perspective, there's plenty of room to go down. You could easily go down to the 70s. You zoom out to the weekly. 70s is a 10 SMA in the weekly. I like the TWAP. You're going to find the most strength in and around the TWAP. 58 on the weekly. The further it diverges from the mean, the more of a premium you're paying for it, and at some point it'll mean regress. That mean regression might not occur until 3,000. That doesn't mean much, because you need to have a sustainable methodology for engaging with the market. If it's going to run to 3,000, clearly that's an egregious divergence from the mean. You're taking significant risk. You want to buy at a discount. So clearly, what's at a discount? Nothing. Nothing's at a discount. Say, Metis. Oh, Sora's at a discount. Astar's pulling back. It all has the same structure. Everything is significantly deviated from the mean to the upside. So this depreciation doesn't mean much, even though I started the stream talking about folks may be wrong. Thinking about all of these hot keywords, talking about these new chains that change everything. I mean, you literally got plenty of chains that have fraction of a penny transaction fees to mutate the state of metadata stored in contracts. Between Optimism and stuff like Rolex on Syscoin, there's plenty of technology that can be built on these chains, and even just Solana. And the new stuff is going to be very interesting, but I find it very crowded. I find it a very competitive landscape, and they have an uphill battle because what matters most is liquidity. Not the macroeconomic liquidity that we so often talk about to get a sense of where these markets are heading, but literally the microeconomic liquidity, the liquidity that is within these networks, because that's what really governs the activity within these networks. And all of the liquidities on mainnet. I mean, sure, you got 2 bill or less on particularly Solana and Arbitrum. Optimism has nothing, Phantom has nothing, Avalanche has peanuts. And that's why Tron has the amount of capital on it that it does, because it's actually used for real world activity, real world settlement, real world cross-border FX, real cross-border settlement. And credit isn't really used from meat space yet. And that's my expectation at some point, sooner than any other adoption, because there's such an incredible financial incentive to consume credit at from an arbitrage perspective. If the credit terms are superior here, folks will seek out how to acquire credit here. And that makes sense to me. So what's the significance of all these Alt L1s and L2s? It's just a place to build the same old shit over and over again. Credit, FX, derivatives, state management, APIs, and decentralized file storage. Over and over and over again. Nobody in their right mind should think just because a blockchain is faster or cheaper that the majority of applications or users will migrate their liquidity over. Liquidity is sticky, and it's very proportional to comfort. Comfort is clearly on mainnet. It's empirical. It's not even debatable, not even remotely debatable. The folks that have the money prefer to pay a premium to operate and execute on mainnet because it allows them to sleep at night. And that's meaningful. And that's not hyperbole. And that's not conjecture or speculation. That's literally just where the money is. So I'm excited for what's going on Cosmos Hubs. I've had positions in Atom and Osmo for a very long time, years at this point. And you see the hyperbole in people's jeets, tweets, I'm going to call them. And they're talking about the atom size they have staked and how long they've had them staked for. Now, this is not to diminish the way anyone who's listening how you may feel, but there's been people doing this for much longer. And when you encounter tweets like this, it just amps people up. Oh, it's excited. I need more atom and I got to stake it. And it gets you riled up with the parallelization and the speed, it's so much cheaper. It's so much better than Ethereum mainnet. But that has done nothing for capital flow. There's barely any liquidity on Cosmos hubs. A couple $100 million. That's not where the money is. So I try and balance this short story because I like Cosmos hubs. You know why I like them? Not for the reasons most people like them. Clearly, I'm interested in the airdrops, but what am I going to sell them and capitalize and then have to figure out the tax obligations? No, I like to lock things and stake them, and I'll see what happens in 2030, 2032, 2035. I like Cosmos hubs because of the seamless cross-chain liquidity that they offer. The SDK offers the IBC concept, which means you got assets across all hubs seamlessly. And we've had to build significant protocols to do that outside of the Cosmos Hub ecosystem. Chainlink CCIP, as well as Layer 0 and Stargate. And multi-chain is dead, so there's not much of a capacity, but there is. Thorchain as well. ThorSwap is finally, it took a long time to get liquidity back and forth between Cosmos hubs and mainnet, so that's very nice because once you get the mainnet, you can pretty much get anywhere. It has to be accepted that mainnet is the central nexus of everything, and everything is trying to vampire mainnet. That is such a short-sighted argument because there's only 60 something billion dollars, $68 billion on mainnet. It's for all practical purposes zero. The perspective and zoom that is very much required is this is just testnet, all of it, even mainnet. It's not ChaosNet, but it's testnet. This is pre-release. $68 billion is nothing. And the potential for capital flows from Meatspace is extraordinary. And they're going to go to a chain that just ran up 10x on the money and is down 30%. And it has 500 validators. There's no reason in such an argument. It just doesn't make sense. It's just latching on to the popular narrative, catching the buzzwords, and finding the hyperbole interesting. Because the hyperbole says, "Oh, you got to accumulate. This is the hottest thing in town. It's gonna beat the pants of Ethereum," and then it goes down 10% on the day, and then you get shaken out. So a lot of what I say maybe is geared towards folks that are trying to get a sense of how to engage with markets with such volatility. And the most important thing I could try and teach folks is you don't have to do much. I don't buy things. I've 4 things in the last 2 years, and I've been playing around a little bit on Cosmos, and that's refreshing. And I've gotten airdrops, and they're locked, and that's nice. But that's about it. Anyway. Let me help you guys out with some comments. I know this is an interesting day when you see all this red. You're like, is it over? Are you wrong? And I'm here to say, yes, you're probably wrong. You're probably wrong. I've been talking about this shit for how many years have we been doing this stream? Look at Syscoin in the green today. Right on the 50 SMA on the daily. Above the 50 SMA on the weekly. This is nice to see. I mean, at least have a narrative that's big. And EVM on Bitcoin is crazy. Now, it's not popular. I and other friends have tweeted about Rolex, and no one gives a shit because there's no airdrop, there's no free money, and it doesn't drive the dumb money over to the network. But it's a damn EVM secured by Bitcoin. That's crazy. So I don't need other people to confirm that for me. I know it's crazy. Whether it gets recognized or not really reduces to great technology is not always a good investment, and that's critical to understand. And a good investment isn't necessarily just overwhelmingly supported by everyone throwing their money at it. All the threads, the tweet threads that hype people up. Airdrop's coming here. It's coming here. You got to get in before the airdrop. Folks are so susceptible to the emotions. And this is why all those years ago, I reduced my engagement with these markets to cash flow. I reduced the story to businesses. The blockchain isn't necessarily a business. It's more akin to a road, a public utility, which means it needs to be time-tested, mother-approved, and comfortable for capital to flow into the market. And that's mainnet. DeFi advisors in the house, the best in the business. Thank you very much. I appreciate it. I sure as hell try to keep a level head. And these markets look good to me. You know, folks see all this red. I mean, Osmo ran up like 10x on the money. So it's up, up 678%. That's cool. These markets look great. I mean, did you buy it at $1.70 and it's $1.73, or did you buy it at 20 cents? So that's cool. I mean, even Atom looks good. That's significantly off its lows. Almost up 100%. 100%! What's with this shit of 10x on the money and what Metis does? Celestia does. I don't even think I could get a ticker here. It's literally brand new. So, you know, it's basically straight up. It looks like say. It's like straight down because the LP needs to balance, and then boop, 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 everyone buys in. It's what goes straight up doesn't necessarily go straight down. It tends to, but this is bullshit. This doesn't mean anything. It's not even a product. It's not even a network. And there's certainly no liquidity on the network. Am I excited? Sure. Because if Save keeps ripping and Celestia keeps ripping, what do you think is going to happen to Osmo and DOT? And by the way, Osmo for myself was literally just an airdrop back years ago, obviously. And that's just been compounding and growing on its own. I don't know, that thing's worth like 15 something thousand at this point. That's nice. So take the airdrops. There's nothing wrong with that. And just sit on them. Don't be frantic. You need to be calm, cool, and collected, and everyone else is going to run around like it's just insane with lack of experience. Raul, Critical Mass, Diego, Tapsy, much a pleasure. Good afternoon, Dan. Tapsy said before, got 90% wrecked like a novice last run. Thanks to you, Raul Hayes. Now I know so much more. Looking back, it's crazy what I didn't know about money, credit, derivatives when starting out. Yeah, now we have a lot of conversations that have clarified a lot of things. You know, clearly on this stream, we talk about everything that Arthur and Raul talks about, amongst others, and we understand macroeconomics to a significant extent as compared to the way we understood it in the past. And then we've attained narratives that are much grander in scale and scope than what circulate on social media, and that puts us in a good position. My sentiment is, and because we were here in 22 and 23. 23 was relatively nice. 22 was painful. I mean, I was here when FTX was imploding. I was here in 2018 and 2019 when everything was imploding back then, but it was a very different market. There was no market as I describe it. Now there is a market, an emerging market. If I had the capacity to traverse 2022, I surely have a capacity to traverse these types of red days. In fact, these red days are, I kind of get a chuckle at them as some folks react the way they do on social media. They get invalidating the narrative. Am I wrong? And that's why you get 10% down on shit like this, because cash piles in, and then they second guess, triple guess, quadruple guess, and they retreat. That's why I love the locking assets, because now you are forced to reprogram the way you look at markets and the way you process a portfolio. And you have to, and over time, your emotional responses recalibrate. I wish Stargate held above the time weighted average price on the monthly. It really got up to a nice price, but it looks like it's going to take much more time. Nice bit of an Adam and Eve pattern, I guess. Straight down and then a rounding bottom. And on the weekly, above the time weighted average price. A lot of these things look good. I saw that Phantom dropped their validator quantity to 50,000. That's cool. So it's less than 50,000. I'm sorry, it's less than 25,000. It's like 20 grand for a validator. That's pretty interesting. So I've definitely thought about that of late. I don't know. You could always stake Phantom because you could delegate the validators, much like you could do that shit all across the Cosmos ecosystem, which is pretty cool. Anywho, hope that helps. Diego, are you interested in the coming stablecoin from FXN Protocol? I am interested in everything Aladdin DAO does. Maybe more so now than in the past. I have a concentrator position. I think that they are a bunch of hungry folks that understand what's going on with the Curve Federation, and that's meaningful. And I think they are positioning themselves well with power, very strong voting powers, building a lot of meaningful tech, and they will get recognition. Seriously, there's $50-something million deposited on Concentrator. Maybe on a day like this, it's down to 40-something, 49, 52. It's $52 million deposited on here. $52 million people with their hard-earned money, whether they're large, big, small, medium, whatever. $52 million. I talk about the total liquidity on networks. That's a little different than the quantity of capital we're talking about here with a particular protocol. That's a tremendous amount of money, 52 mil, for an asset that represents this functionality, this business. So they do need a bit of a pivot, which they have talked about they're working on all the way from the DAO perspective, ALD, and that's cool. And even if there was no modifications to the protocol, I think over the next 5 years should be very interesting from a revenue standpoint. 20% is crazy. That's a crazy number in meat space terms. You know what it takes to get 20%? So it's very interesting when you see a mispriced asset like this. This remains a very rare asset in my opinion. was looking at Solitude, but it's at 270. This thing went Burj Khalifa on us. This thing needs to retrace down to $1.60, and we'll see if it holds. Because otherwise, it'd be nice to see a bounce on 36 cents. But that'd be a complete retrace. Nothing's impossible, and I certainly wouldn't expect that to occur. Still not fond of the centralized control over so much of the asset supply, but it is growing more appealing. The tech is very interesting what they built. It's got Maverick and all that fancy shit that everyone's doing. Trader Joe's doing some of that fancy stuff, but I think they're much further ahead. Roosh spent a fair amount of money, and what's his name? They've been developing a lot, so it's pretty interesting. But great tech isn't always a great investment, so that for myself, extreme prudence. Unless I see a screaming opportunity, I'm not fucking parting with my capital. I need it. I need a certain amount of money at the end of the year. So unless something is like, oh, I could get a great position size for a relatively small amount of capital, or this is a screaming investment, then that's the only way I can pull a trigger. Like if I'm going to deploy 0.001% of the portfolio, what's it going to do? Frankly, I did that for like Sora Network. If you deploy $500, it's a $10 million L1 chain that's building CBDCs for the Solomon Islands. I mean, obviously the Solomon Islands is microscopic, but that could be quite interesting to other folks. So there are plays where like 200, 300, $500 can change the portfolio. The only thing better than 1% of the portfolio to 10% of the portfolio is 0.001% of the portfolio to 2% of the portfolio. That's crazy when you see appreciation like that, when you can turn $500 into like 50 grand. So the expectations folks have, you need to adjust. 50 grand is a hell of a lot of money, and that is definitely something I'm not going to do the same mistake with. Money was easy in 2020 and 21. I couldn't even describe to you the size of the transactions I was doing. I was malinvesting, malallocating. I was just throwing around cash like it was free. And that's not something I will do again. I size my activity based on my needs for myself and my family. Is a goal to finish your mortgage? Is a goal to get your roof replaced? Is a goal to get really good insulated hurricane windows? 50, 60, 70, 80 grand for windows for the house. A roof nowadays is 30, 40, 50, 60, 70 grand. I was quoted 70 grand on the roof. Maybe you want solar and you want to get off grid. Maybe you want to not have a car bill. Maybe you want an electric car so you don't have to pay for gas. And now you have solar. So solar and electric car, now you're not paying nobody. Now everyone's on gas lines because some shit happens and your car's charging in the garage and your lights are on and the neighborhood has no electricity. I don't know, some shit like that. So that's the way my mind really thinks nowadays. Since retail isn't really in yet, are we actually not early on any of this? Yeah, look, they're not in, but look at the price appreciation. So early was certainly when, Raul and Mike Howe were talking about it in late 22. Over a year ago was early. Bitcoin was 16 grand. That was early. It's been up ever since. So folks think they're early. It's not early anymore. This isn't early. Look at the moves on these goddamn charts. It's crazy. But there is assets that are early. It's still cheap. Like you're up less than 100%, 70% from local bottom on CRV. I mean, Atom is still at a discount. I know folks are hating on Atom because of the numbers that Say and Celestia are doing, but that doesn't mean shit. Atom, Cosmos Hubs. This is Cosmos Hubs. That's what it is. This is where it started. That's meaningful. If anything really catches like a structural bid, it bleeds over right to the core infrastructure, which is Atom and Osmo. That's exactly why Osmo is up 678% off bottom. Not early. Certainly not early on this bad boy. It's barely down from the top. So this is really a good time to like fall back on macroeconomics to find some comfort. Let time pass. You could literally a quarter could pass, 3 months could pass, 6 months into June and July of 2024, and you can have 6 months worth of depreciation or a slow bleed to the downside. Are you going to get fresh lower lows compared to 22 Q4 2022? That's the only equation you really need to think of. And by the end of 24, I think we'll be well off those lows. I think we'll be well off any higher low that we print as well. It's the type of thing I'm thinking about. I really want to see what this market's like in Q3, Q4 of this year. Woo! Looking back at 2023 as a whole, what, if anything, would you have done differently? No, I nailed 23 and 24. Just company management, just reporting and accounting. It was a big prep. 22 was the start, but I was still in the midst of emotion. All that capital loss, nominal loss, unrealized loss. And then 23, it was just started to stabilize, and you finally found the floor. So you really get a sense in 2023 of how well you did in 2020 and 2021. Because if you chose businesses, if you chose things that are systemically significant, you ended 2022, started 2023 with an actual portfolio of companies and protocols, systems that are significant. That means you did well. And it's not the depreciation that tells you whether you did poorly or not. It's whether the bottom, higher lows, that is how you judge how well you did. So if you're down 80% on a portfolio, but from like 2019, 2020, you're up 2, 3, 4, 5,000%. Oh my God. Okay, so all the froth came out, all the excess capital, the malinvestment, the divergence to the upside as we talk about, bled out of the market, and you have a higher low. That means you chose well. It's very important to redefine how you see if you chose well or not. How you measure the portfolio makes a big difference in your capacity to traverse the insanity of these markets, especially with the volatility. MNAV, a cap. If you were starting to invest today with the knowledge you have acquired, would your position or strategy be any different? No. I'm on point right now. Man, if I started 2020 and 21 with this knowledge, I would have had 90% less transactions, and I would have retained significantly more capital. It would have been much more efficient, much less work. And that's the goal. Isn't the goal you don't want to work? You want to do less work? But it turns out that everyone gets to the crypto markets and they're like, oh, Twitter, and they're trying to find the tweets to find the next airdrop, and everyone's listening to all these crazy streams about these parallelized EVMs and all this shit, and they're doing more work. You want to do less work. So if I knew then what I know now, I would have done significantly less work. I don't really do much anymore in this regard. Hope that helps. Hey, Cap, stupid question, but how do you set up a TWAP indicator? TWAP. Trading View, TWAP Trend by Jagged Soft is the one I like. It allows smoothing, so it smooths the TWAP over a period of time. TWAP is like straight up right in the middle of the SMAs. I find it very meaningful conceptually. The time weighted average price. Over time, this is the price. And I like that. So that's what I want to see. I want to see all through the noise. And then I love that when you go out to the 6-month chart and you go over to Bitcoin, the TWAP on Bitcoin is at 22,000, and I could say to myself, Bitcoin drops to 22,000. All right, it's a mean regression. It's at a premium. Bitcoin's at a premium. I wouldn't be surprised at all if it dropped to 22,000. I'm like, all right, it's not even at a discount yet. So it gives you such a great perspective on the long time horizons of where we are and how frothy things are. And Bitcoin's Bitcoin. So maybe it mean regresses in a couple of years. Maybe it doesn't mean regress to the 6-month. If you go to the 3-month TWAP, you can say, see, you're still at a premium. Very nice premium. You have a mean regression to 34,000, and Bitcoin's chart looks like a hell of a chart. So these types of perspectives allow you to have that comfort on a minus 10% day, a minus 20% day. Is it at a premium or is it at a discount? If it's at a premium, it could go down, and you should expect it to. And then if it's at a discount, you can acquire it. And then you can buffet the market and buy shit that's at a discount, that's mispriced, because people don't see what you see. What an honor for Aladdin Dow to earn the respect of the cap. Def want to clip that. Yeah, man. You, all of you guys. Um, you know, it's not easy to build something from the ground up, and even harder is to gain reputation, build trust, and then that's what's occurred thus far, and that's very, very interesting to see. Um, Aladdin Dow gives me the vibes of grassroots. It's like if me and 5 buddies from college and a couple of social media folks said, "Oh, hey, you guys are doing some cool stuff," and you built a group of folks. So it seems very grassroots. I mean, it's certainly the antithesis of venture capital, and it's light years beyond the stupid meme coin where you could press a print from Open Zeppelin and print a meme coin. So that's sophisticated code to do the recycling and the compounding and to get it all tested and to make sure it works, and it works. So that's impressive to say the least. By the way, sir, you should, in my opinion, consider the Aladdin Dow Community Booster Program very rewarding, and folks like you actually mean what they say, will be honest, are exactly the right fit for it. Yeah, booster program? Community booster program. Uh, I'll ping you, my man. We'll see what is reasonable. Check Safe Stake DVT. You'll see everyone cares about SSV DVT. Very late. Distributed Validator Technology. How much liquidity? How much is it paying? Calculate XYZ. How much does it cost? How much is it paying? And how likely is it to continue paying me in the future? Because I don't give a shit if the price of the token will go up. I want to know how much they're going to pay me to buy it. Now, folks need to start getting cutthroat. And the bottom line is my pinned tweet is the best expression it gets. You want me to invest in your company? How much are you paying weekly? 0%. But the growth of the stock price, incredible technology, parallelization, sub-penny transaction fees, where it costs a fraction of a penny to do a $5 transaction. Fuck you, pay me! I don't give a shit how good the technology is. I don't. I don't care. I want to be paid. And sure, if that's the first thing I'm thinking, pay me, then I'm going to do my due diligence. Because the technology needs to be good to contribute to Z. It's not going to continue paying unless the technology is good. But the first and foremost thing is fuck you, pay me. Because I'm the one investing. So that is a very important change to mentality, and that is the core of my investment thesis. Everyone's been soft for the last decade with stock prices going up, up, and up. And they're even softer in the crypto space with all this bullshit froth that we see in the markets. Pay me. That's what I want. And then it has to be good technology so it actually stays around. Hope that helps. I don't mean that in the. This is gasoline. The fuel gasoline for fuel, diesel is more expensive, but it's still second to none when it comes to moving heavy cargo. It's because of the torque that gets produced by the large diesel engines. Very low RPMs. It all goes to torque. Yeah, very effective. So it's a complicated topic because I'm an engineer, and it's dirty. It's not a high compression. It's not a thorough burn. But yes, you make a good point. The best tech isn't always the most appreciated. Are you considering using f of x protocol, upcoming CVX based derivative product? Probably not. I go to cash, and I'm not at the point where like convex is a cash, or curves a cash. No, no, no. I don't expect the appreciation. We've talked about that. Yeah, really, Bitcoin, you want to protect your money. So Bitcoin is, censorship resistant. That's your cash, but it's volatile. So you got to play FX and you got to swap to protect the nominal price point. And so that's why stablecoins are meaningful. So CRVUSD over the next couple of years is very interesting. And that's what Arthur's talking about. Arthur Hayes is talking about what's a dollar that's not backed by a dollar in a bank account. So what are these synthetic dollars? So I'm very big on these synthetic dollars and the mechanisms that folks have come up with to maintain peg and organic mechanisms. And thus far, by the best system I've seen is the llama. So it's very interesting. So note that my stable is a USDC. It takes time to trust even the things that you're interested in. But over time, trust is built. So I don't really use any products. The only product I guess that I use is an LP position in Prisma. That's about it. I don't consider locking a product. I consider it a purchase. I own a piece of that company. So I don't have any LPs, and I have cash, the businesses that I own, and the one product that I have an LP in. That's about it. And unless it's something that, I mean, Prisma's still cranking out 300%. So why? What's it cranking? 286%. So at 286, I'm still sitting around. Maybe, 100%, 150%. Which is crazy to say that at 150%, it still is starting to get too low. That's how much they need to pay to garner my attention. I need 200% APR. Otherwise, I'm going to take my capital and protect my principal. I've had this for quite a while. It's interesting. Interesting the way our thoughts on how to allocate capital have evolved over the years and how prudent we've become. Last couple of questions. We'll wrap it up for today. Definitely much respect to a lot of Dow team and contributors for what they do. I must say the culture there was one of the things that attracted me to try and get involved there. Yes, indeedy. That's why I stay with my startup. I work for a startup company. It's been a couple of years, and they're good people. And they deserve my time and attention, and I like helping. So it's important to be part of things. So even if you had all the money in the world, you still should be contributing to to be social and collaborative and productive from a team perspective. It's imperative to feel accomplished and satisfied at the end of the day. Hope that helps, guys. 23 people made it to the end of the stream. 10 likes. Smack that thumbs up button now, please. Thank you. I appreciate it. Tell everyone to subscribe. In the description is a link to Discord, the most rational community in the entire crypto space, because we can do better. You know it. It is Friday. I'm taking the weekend off. I always do. Figured I'd say it anyway. Catch you guys next week. Have a good one. Be safe. Be rational. Peace.